Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, and this is the show where we will be discussing what's the latest buzz on the D Street. Of course, we'll be joined by top market experts to guide you through all the latest market movements and helping you understand what are the moving parts and the triggers that you must be keeping on your watch list as well. Let's actually welcome our guest on board. We have Mr. Abhishe Basumalik joining in from Sri Rama PMS as to help us understand what exactly to expect in the markets right now. Warm welcome to you, sir. Thank you so much for taking the time out. Well, first up on the markets, we've slipped below the 25,900 mark yet again. So the weakness persists and we are 130 points lower in trade just within, about 45 minutes of opening in trade today. So the cautiousness in trade, how would you explain that? What do you think is keeping the markets probably very nervous at this point in time or cautious, lacking any sense of direction? How are you looking at the current stage and what do you think is coming in forward? Of course, there is an absolute no sign of a Santa Claus rally, even as we inch closer to the Christmas as well as the New Year's Eve.
Good morning, Sakshi, and good morning to all of you, all the viewers. See, I think the challenge right now is that we are still in that indeterminate phase where the market is neither going up decisively nor going down, and this has been continuing for a while. So the time we sort of touched nearly the all-time highs, we've retraced from there, and it's going sideways, I think, for a couple of maybe 3-4 weeks since then. So my sense is that we need some kind of an external impetus, whether it's the trade deal announcement or something like that, to actually give an impetus to the market to actually break out from these zones.
It's yes, there is today only about a sign of green in FMCG sector. Rest all of them have slipped lower, and of course you have some individual stocks that are reacting to the reacting to the news flows at this point in time, and that's keeping the stocks buoyant. Like Bharti Airtel, for instance, is up by about 1%. There is a brokerage house update, Morgan Stanley with an overweight call and a target price that they've raised to 2,435 there. That's the one that's keeping the stock buoyant there. You have FMCG stocks that had garnered some strength yesterday and it continues today. So Tata Consumer Products is higher, Nestle is higher today, HUL was up and about yesterday. Let's talk about this space first. FMCG has been a big laggard and an underperformer all through the year of 2025, sir. Is there any sign that there could be a positive move on this space? No matter that there were so many reforms that took place, there were the tax reforms that took place. We were hoping that more money in the hands of people could actually lead to better consumption. Then there were the GST reforms as well. How are you looking at the current sense and what's happening in FMCG sector?
So I think it's wrong to say that the FMCG sector has not been doing well. The reason I say that is because the consumption of people have moved significantly away from the large listed FMCG players, right? So today what has happened, because of e-commerce and quick commerce, the real moat that these FMCG companies had was distribution. Now that has become much more easier for smaller, nimbler regional players to come in and take market share. So if you see, and the listed players are still the big behemoths like the Nestle and the Dabur and the Marico and Unilever and companies like that. But actually, if you see, a lot of people, especially the younger folks, have moved towards companies which may not be listed. So it's not that the consumption of FMCG has reduced. It's just that it's become much more broad-based into companies that are not listed in the market. So that's one. But if you look at the listed space also, with increasing consumption or rather increasing income and lower distress in the rural economy, these FMCG companies, which have actually not had too much of growth over the last maybe couple of years, their prospects seem to be slightly better compared to in the previous years. Having said that, I am not very keen on buying FMCG companies, because ultimately they are going to be very defensive. So if one is interested in having a defensive portfolio, then definitely one should look at some of these companies.
Okay, fair point. Let me also talk to you about the key sectors that you are bullish on for the upcoming new calendar year. Where are you finding confidence, value, more opportunity in the new year, sir?
See, I think if I look at, when I have to look at top down, right, look at sectors first, we have to understand where is the money flowing, right? And here, when I'm talking about money flow, I'm not really talking about the stock market money flow. I'm talking about where capex is happening, where are the industrial investors investing in. And over the last maybe decade or so, in India at least, the biggest investor has been the governments, whether it is the state government or the central government. So now, if I look at where the focus has been, uh, it's been in railways, it's been in airports, it's been in ports, basic infrastructure, right? That's defense. These are the places where the focus for the government has been, and I would argue that the focus will continue on those areas. Uh, One addition that we have seen in the recent last few months is the shipping sector, the maritime shipping sector, where there is a lot of focus that is starting off.
Absolutely.
So that's something I think which could actually start getting interesting, but it's not a short term play. It's going to be a slightly longer term play, so you don't expect something to happen tomorrow. But these kinds of sectors, when they start picking up, you will find that they tend to do well for 2 3 years, 5 years. So these are the areas which I am
Sure.
personally interested in, and then you can find ancillaries or derivatives
Of
of
all these
of these
sectors.
companies.
Absolutely. Now, one other sector that also is coming on top radar of the government is the public sector unit banks as well, and that's something that we're going to be focusing on. Abhishek ji, we will come to you on that, but first let me go across to my colleague Karishma Sudani, who's been tracking a special report suggesting that the center is likely to raise the FDI limit in PSU banks to 49%, and that's something that we are focused on. Karishma, good morning to you. Do help us understand, there has been a lot of back and forth as to whether the government is really looking to enhance the FDI there. Will 49% be it? Last, when I heard from you, you did say that, probably 49% may be happening. What would this entail? What are the contours? What is the government's thought process there? And how is this going to be really benefiting the sector?
Good morning, Sakshi. Well, we've been bringing this exclusive on Business Today for a while now, that the interministerial consultations on this aspect of government's finance ministry's proposal to increase the foreign investment in PSBs has now been cleared, and the next step procedurally is that a cabinet note is likely to be floated. My sources have told me that could happen very soon. In fact, could happen well within few days, if I must say. Definitely happening before budget, because the finance ministry has been saying for quite some time that there is a need of foreign capital for PSBs and our PSBs to go international, especially with the kind of asset quality that they have shown and a cleaner balance sheet that they have displayed in the past few years. In fact, in comparison to private banks, India's public sector banks do not get that spotlight, and government believes that if the FDI is hiked, then they'll also get better with their market valuations. We could expect this news to come in well around or before budget, which could benefit a lot in the banking space, especially for the public sector banks. Besides, of course, what has made news is the 100% FDI in insurance.
Absolutely. That's something that we are also keeping on our radar on this show. Thanks, Karishma, for all of that update. And of course, like you said, within a few days, you may get some more development on the same. So keep tracking that, and we'll get you soon with our viewers also understanding more about it. But Abhishek, let me come back to you. Of course, 49% of an FDI limit, if it is enhanced in the public sector unit banks, how would you really approach the sector? Already, with all these triggers floating in, we have seen periodic moves in the PSU banking space over the last 6 months or so, and the sector continuously shows us some kind of an upside because investors are hoping that along with foreign ownership, even the consolidation and mergers that is likely in this space, that also is something that the government has indicated may lead to stronger PSU banking space, and therefore a lot of opportunity and an upside that investors can look forward to. How are you approaching the sector particularly?
See, the two parts to this, entire PSU banking space. One is, uh, first of all, just hiking the FDI, limits. I don't think is going to make much of a difference,
Okay.
because if you look at the current situation, the current FDI limits are not yet exhausted. I mean, it's not even close. So wherever there are maybe I forget the numbers, but I think even 50% of the current uh, limit is not yet reached in nearly all the banks, maybe excluding maybe one or two. One of the reasons why I think this is being done, obviously, one is to have a sentimental impact, and second is the point that you mentioned is for the mergers and acquisitions, or rather the acquisition. So if we might actually see some of the distressed banks, or the really small ones, getting hived off, and some large foreign bank coming and taking a meaningful stake in that. So that could be one reason why this hike in FDI is actually being thought of. I don't otherwise see too much of a logic as it stands today.
Okay. And just picking up the cue as to what Karishma was hinting at, I think the big news coverage that everybody is going to focus on is the FDI and insurance space as well. So let's focus on that a bit too. The insurance bill for 2025, the government is moving this insurance FDI bill as cabinet has cleared the bill. Parliament nod is likely. Here the proposal is that the FDI limit to be raised to 100% from current 74%. Remember, the goal of this bill is that one should propel insurance for all by 2047. Now, to understand the bill, this is again, like I said, it's Sabka Bima, Sabki Raksha Bill, it is being termed as 2025. It amends the Insurance Act, the LIC Act and the IRDAI Act. The major reform comes in to boost insurance coverage. The key changes that have been proposed are 100% foreign ownership. Of course, no Indian JV partner required in that space. Also, it is required that the top official must be an Indian citizen. The non-insurance firms can merge with the insurance is something that we are given to understand. Some of the structural reforms are going to shape up in that same fashion. However, the composite license, is probably not going to be coming in that space as well. So that's something that we are focused on. Let's try and first understand what's happening in the insurance space and what would this bill really do to the insurance sector at large. Abhishek ji.
Again, I think very similar sentiments, at least from my side. I mean, what is the incremental difference from a 74 to 100? So if there is a foreign player who was really interested in investing in India, what was stopping them from doing it when it was 74%, right? So again, I think these are good measures. It's more enabling in nature, so that in future, if a company wishes to come in and start shop here, they can do it. But I don't think it's going to become a cascade of new players coming in, etc. So 74% today, anyone who really wants to get into the country can definitely do so. So I don't see a major difference to the insurance companies as such.
Okay. Do you think this move will entail more, kind of consolidation, say for players like Max Life and a Max Financial? Will they probably felicitate more mergers there, simplification of the corporate structure? Will that happen? And therefore, how should investors be viewing that?
Very difficult call to take, but if you really look at the insurance sector, they have been consolidating for the last 4 or 5 years. We've seen a lot of JV players where the foreign partner or the Indian partner have left, and it's sort of changed hands. A lot of smaller players who started could not build up their business. They've exited and sold their stake to the larger players. So we've actually we've been seeing this happen for the last 5 years, and I think that will continue. And we will have maybe 7, 8, 10 big players dominate the entire space, and which is going to be good. If you look at India, both on the life and the general insurance space, we are severely underpenetrated. So the more penetration we have, the better for us, better for the overall financial structure of the economy.
Absolutely. Now, we do know that open architecture is not part of the bill, and open architecture would have probably meant that individual insurance agents would have been allowed to tie up with more than one life or general or health insurance companies. Would this have any negative impact for companies like, say, LIC or an SBI Life, which actually get a major chunk of the new business premium with respect to these individual agents? For LIC, it's as high as about 92% odd. For SBI Life, it's about 28%. And would they be the most affected with this aspect?
I don't think so at all, because if you see, there are people who are actually doing this professionally and who are doing it at scale. Most of them are corporatized, or I'm not talking about the single agent kind of person. I mean, slightly bigger, they're all corporatized, they all are doing multi-party, etc. They have, or there are people who are, they take their license for one company in their own name, one in their spouse's name, and things like that. So it's already happening. I don't see anything major, that is going to change.
Okay. Since the absence of composite insurance license agreement from the Insurance Amendment Bill is being seen at this point in time, I also wanted to assess, is this probably negative for stocks maybe like HDFC Life or a Star Health? These were the insurance companies that had actually shown a lot of interest in getting into the health insurance part and wanted to foray into motor insurance business as well. So for them, how do you see the absence of this aspect in the bill?
So if you look at, say, HDFC, they also have a general insurance part. So the ones which are really, maybe Star Health is one which does not have a life side of it, but everybody else have, they are both in the life and general insurance space. So I don't think, again, maybe if there's a composite license, maybe there's going to be more synergies in terms of cost and cross-selling, etc. That's going to be easier. But other than that, I don't see, again, for the larger players, both, I mean, especially in the private sector. In public sector, it's very clear demarcation between LIC and the general insurance players. But in private, I think most of them have both divisions or both companies separately. So whether it's ICICI or Kotak or Bajaj, Max, everybody does both. So doesn't really change much.
Okay. The last aspect that I really want to focus on is that the reduction in the capital requirement, especially for the reinsurance business, from 5,000 odd crores to 1,000 odd crores. How are you seeing this aspect? Will this lead to more competitive space when it comes to reinsurance? Right now in the listed space, we have GIC Ray as the big player there. How do you see this aspect changing for GIC Reinsurance Company?
Again, I mean, GIC is a very, very well-entrenched player. Don't see any difference to them. Reinsurance is a very different, sort of competency required from normal underwriting. So, with lower entry, sort of capital requirement, maybe some of these existing players may want to sort of become a reinsurer. But again, that would mean a new strategy, new thought process. So again, no immediate, sort of changes expected, but maybe in the longer run, we might see a couple of more new reinsurers coming in.
Okay, got that. And if I have to ask you in the end, from the entire insurance universe, where do you still find comfort? Or do you think there is still some time before this sector starts to perform after the bill is presented or, finalized?
In fact, insurance, some of these players, if so, for example, if I look at an SBI Life or, uh, you know, HDFC, ICICI, all of them are actually doing quite well. None of the, I mean, this is not a stock recommendation, but in the entire space, the challenge with that we have in India is that the penetration is actually very, very shallow. It's only in the, mostly in the top tier cities that it's the insurance is getting sold, and that to the more well off households. So what is really required is low cost, uh, you know insurance, both life and general, and uh, investor education, so that people actually come and buy this. So lot more push on selling and distributing insurance to the to the lower income households, to the uh, you know to the cities, towns, where who are not part of the top of the in the top income areas, or the top cities. So that's where I think the greater focus needs to be. And obviously the opportunity size is humongous. I mean, the penetration being so low, even if you can increase the penetration by a few percentage points, the opportunity size is very, very big.
Okay, fair point. I hope this has given an whole understanding to all our viewers as far as the insurance space is concerned, and what changes for what kind of companies as far as the insurance bill is concerned. Once it's stable, once it's passed, of course, we will get greater clarity as we read into the bill as well. And of course, we'll keep focusing on that and bringing you all those aspects as well. Let's move on beyond insurance to the other spaces as well. One more aspect that's on the buzz today is the rupee, the currency depreciation that continues to go unabated. Now, the rupee is trading at 90.83, a further record low, a fresh record low that we have hit in trade today. Let's try and understand what is really happening. And I think the big question that a lot of viewers would have, Mr. Abhishe Basumalik, is that usually whenever the rupee used to depreciate, it would be the RBI that would constantly intervene and probably sell the dollars, keep the rupee in a limit. But this time around, I feel that the RBI has been less aggressive in protecting the fall of the rupee. Is there a reason behind that? What do you think this continued fall of the rupee will really lead to? How will the markets take it, going forward? Which are the sectors that are going to be deeply impacted, and vis-a-vis those that would stand to probably benefit, like exports?
See, if you see yesterday's numbers, Indian exports in November uh, was extremely good. And one of the reasons probably for that is the weaker rupee that we are seeing. Now, why RBI is not intervening, etc., is something that only the RBI governor, or the RBI top brass can talk about. But I think it's a thought out strategy that we, because of the US tariffs, uh, we want to cushion our exporters to an extent, and that's what probably that what we are seeing. So we've seen rupee move from around 84, 85 to 90, 91. Last time, I think last week, I was on your show. My target basically for the rupee right now is around 92 to 92.5. And although it may not happen very quickly, but I think that's the direction we are going in. And most likely it is because the government wants to cushion the exporters. We might see a turnaround, and appreciation of the rupee back to 87, 88 odd levels if we see a you know US tariffs reduce significantly, maybe to 15-20%. That will boost a fair amount of confidence, and that's the only situation I see where we are going to see uh, you know rupee coming down. Otherwise, it's going to be like this, and probably maybe the velocity of increase is going to go down, but it's headed higher if things remain like this.
Okay, got that. Last 5 minutes on the show. Let's try and understand from Abhishek ji, where else is he finding, probably any opportunity for investors to really look at. Abhishek ji, this entire year, as we have seen 2025 pass on, it's been marred by a lot of volatility. On an everyday basis, a lot of external, shocks that have continued to keep all the investors' nerves on the edge. The biggest factor has been the US trade uncertainty. And even as we move forward into the new year, this uncertainty still is looming, Raj. We still do not have a clarity as to whether we are inching closer or are we near to sealing the deal when it comes to the US-India trade. What exactly is your thought? Do you think the new year also will continue to be marred with all this uncertainty, lack of clarity, and therefore the markets, would they continue to be in the similar fashion, or do you see a marked improvement there?
See, very difficult to say. I mean, I don't think the US president himself knows what he will do, in a week's time. So, how would people like us, common people, understand what's going on? So, very very difficult to predict. We've been hearing about a trade deal completion at least for the last 3-4 months, and it's not coming. But I think more than a trade deal, which is important sentimentally, I think what is happening around the world is more important. We are seeing rate cuts in parts of the world. We are seeing in Bank of Japan raising rates on the other hand. So a lot of dynamic changes going on in the world right now. So it's a very difficult situation to call at a macro level what's going to happen. Uh, there is a possibility that US markets can correct because there is a lot of froth in the Mag 7 kind of stocks. It can start correct. If it corrects, then will there be a contagion effect across the world in other capital markets? Very difficult to answer all these questions. So short term, I think there is going to be a lot of uncertainty that is going to continue. Uh, Along with that, I think if you look at the corporate results that India Inc. has produced, it's not great, right? The profit growth year on year has been tepid in most companies. So it's not that India is doing great and the valuations are also very very cheap or mouth-watering. Neither is the case. So we are at a place where we are growing moderately. Valuations are rich. World is in a turmoil. So it's going to be difficult. But my sense is that longer term, say a year down the line, say next December, we should be higher than where we are today. It may not be a lot higher, but we should definitely be higher from where we are today.
Okay, fantastic. So at least somewhat higher, if not a lot higher, as far as the markets are concerned. That's the positive outlook that we have on the markets. Thank you so much, Mr. Basumalik, for being with us on the show and, of course, helping us and our viewers understand a whole lot on variety of topics that we discussed. 25,909 on the Nifty, 117 points lower in trade. We still have a weakness across the broad markets. You can see apart from FMCG, all the sectors are down. Metals have lost a lot of ground. You can see private banks, oil and gas, as well as real estate, the IT stocks, all of them are actually slipping in trade. We just have about a handful, 12, 14 stocks on the Nifty that are still hovering higher. Bharti Airtel, Tata Consumer Products, HDFC Life, Nestle, ITC, Titan. These are the consumer-oriented companies that are still hovering higher. But a lot of ground has been missed as far as the names on the Nifty are concerned on the lower end. So Eternal is down today 4% almost. Axis Bank is down 4%. Tata Steel, JSW Steel, Geo Financial, all of these stocks are actually under pressure. So let's see how things pan out in trade. Will this be another day where we will just creep through and see whether the markets end almost flat with a negative bias, or will we see a bounce back? Is there any trigger that will pull the markets from these sideways uncertain zones that we've been seeing the markets trade at over the last couple of sessions? Stay tuned with us on Business Today Television as we continue to get you all the market coverage. And of course, I'll be back with the Daily Calls edition at 12 noon, where you can ask all your questions about the stocks in your portfolios. Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is our latest offering, What's Hot, a show that focuses on what's the latest buzz on the day's trade. Well, IPO space clearly in focus. Two new debut stocks now making a entry into the stock exchanges.